All right, we're going to do a video for Mixmaster Mortgage Pro. He's 39 years old here. He's making 500,000 a year, and he's just starting to realize he's going to pay half in taxes. So we're going to compare now over here on the left, and we'll go over here and look at new with without my help and with my help. And I would just ask you if I could help you save, you know, 500,000, maybe even half of the amount you're paying in taxes this year. I think we're halfway through the year. You said you made 240,000. You've roughly paid 120,000 in tax that your W-2 employer is holding back. So you're experiencing half. And then when you get to 500,000 at the end of the year, they will have held back 250,000. So if I could save you half of the 250,000 they're holding back in taxes, just 125,000 a year times 10 years, that's 1.2 mil, and you're going to work for 20 years, it looks like 26 more years, so 2 million, a little more than 2.5 million really. So if I could save you 2.5 million in taxes that would have been gone forever and you'd never see it again, get it into account and get it compounding to turn into a big fat juicy retirement for you, would that be the basis for creating an advisor client relationship? Great, I hope your answer was yes. Let's take a look. So here's what we got here. 500,000, you're coming down here. And if we look at federal tax, let's see here. 2021 single filer, making 157,000 or more. If you're making between 209 and 5, you're paying 35. And then anything over that, you pay tax on. So we'll just call this 35. We'll call this 35. Because we're ballparking it here. And then let's see, state tax. Let's see, Ohio state tax down here. Let's see, single income bracket, 221 to infinity, 4.79, call it 4.8. All right, so here's what's going to happen. You make 500,000, federal tax, they're going to hold back 175,000. Your Social Security, they're going to take 31,000. I don't think we can affect that much unless we make this number go down with legal tax deductions. Mixmaster Mortgage Pro. So Medicare, they're going to take that. You want to have that for old age. But Ohio, 4.8. If we look at Ohio, 4.8. That's 24,000 plus the 175. So there's 200,000 that we could get. I was just trying to save you 125,000. So let's see if we can do that. Let's see, and then City of Columbus 2.5. So altogether, you're making 500,000. There you go. That's just about half. Losing 249,000 every year for 26 years. That times that is that. You're going to lose 6.4 million. So let's do something about that, okay? And the end goal here is that what I want to do is get you some deductions. Instead of making 500,000, paying 249,000, I should be able to make it to where we only have to pay 58,000 for you, okay? And then that just lowers all your, like on federal tax, you were paying what, 175 here. So we're going over here, we're going to get you from the 35% bracket down to the 24. You're only paying 35 grand instead of 175. So security, paying 6.2 on 500,000. Of course, that's 30 grand. We're only going to pay 9 grand. Save you 2/3 of that. Medicare tax, you're paying 7,000. Not that big of a deal. We'll save you 5 grand there. Ohio, you're paying 24,000. Should be able to save you. That's almost like 75% on that. Ohio City tax, 2.5 on 150 grand. We're going down from 12.5 to 3,700. Okay, so instead of paying taxes of 200 and pay taxes of 249,000 for 26 years to the IRS, you're never going to see it again. You lost 6.5 million. That's compounding in their retirement account. Let's put it in your account. That just makes sense. So I should be able to cut that down. I save you 5 million basically that we won't pay to the IRS, and then we're going to stack it into your retirement savings. So we'll get about 9 million away. So we'll save you money you paid in tax, pack this much away that would have gone to taxes. The value you should receive at the end of this is going to be about 14 million. So how are we going to do that? We'll take your income. If we can get it down low enough, you can still contribute to a 401k at work, 18,000. This may or not be able to do that. You may not be able to do that. You're not over 50, so you can't do the catch-up, but you can do an IRA if you're in the income brackets. We can look at that. You probably won't be able to get this if you're making, if we're showing 150,000. We will have to take a look at that after we do some actual planning. So this is just a ballpark day. If we do something, it wouldn't be deferred comp. That's just there. Would do like a 214, 25,000 a month. We can put into this and hide another 300,000. Of course, you get your mortgage interest deduction. You'll have some depreciation. So altogether, we should be able to save you 350,000 that you're not saving over here out of the 500. So instead of showing 500,000 for them to start charging you on, we're only going to show the government that you netted 149,000 because we got you all these tax deductions. So you're only paying 58,000 instead of 249, right? And then instead of paying taxes of 6.5 million, you're paying 1.5 million over those 26 years. So I can't save all of it. You got to pay some tax if you're going to get money that comes through to you. But savings on your taxes, 5 million, and then packed away in retirement is the 9 million. So that is about 14 million of value. Charge you 2 points. Fee would be about 281,000. You can just pay it over 10 years. That gives our company steady cash flow. You just have a monthly payment of $23.48. Now that should pack away $9 million by the time you're ready to retire. And then at age 39, if you're trading like you do or doing some other things, if you can let that cook a couple years, I can make your monthly check more than 53,000. Technically will usually double if you wait 10 years. So if we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 53,000, we take this over, should double to a check of, instead of 53, roughly 98,000. Okay, so if you can let it cook. So otherwise you could just take it and start taking interest off it. But I should be able to double your 9 million to roughly 19 million if you give me 10 years once you hit this 39-year-old spot. Okay, so that's what I plan to do for you. Just want to give you an idea of what I'm talking about because I don't know, this isn't the world you run in. I know you're great with numbers, but this is kind of different. So that's how I do it. Let me know if you'd like to work together. Okay, brother?